Assalamu alaikum. Welcome to lecture 10 of taxation. So this topic is national insurance. This topic is in addition with your income tax. So usually when you are calculating income tax, you are supposed to calculate NIC as well. That then it is said that you have calculated your total tax. Total tax includes national insurance. What is national insurance? Every resident in UK has to pay national insurance contribution, NIC, on their earnings. How we pay income tax? This is compulsory. Okay, they must say the UK government takes it from every individual. That's how they get the benefit. The medical fees, the education fees. Okay, it's written back to them. So now this is the only lecture on NIC. Previous all the lecture from lecture 1 to 9 focused on income tax. So this lecture is on NIC. This you should always calculate in addition to your income tax. So now national insurance. The contributions. Remember, national insurance are paid by both employers and employee. So class 1 contribution is paid by employee. Then we have class 1 employee, class 1 employer, and annual employment allowance. Then we have class 1A contribution. You need to remember these classes, okay? Contribution NICs are divided into different classes, and the way we calculate are different under each class. Now, earlier we had class 2, that class 2 contribution is removed from the syllabus, okay? So now we are moving on to class 4. After class 1, class 4. Class 4 are for self-employed. Remember, class 1 is for employees and employer, but class 4 is for self-employed. Then we conclude. So under this, class 1, class 1A and class 4. These are the three NICs we will be covering here. So now they are collected to fund a variety of aspects of welfare state in a particular state pension. So now the classes of contribution are relevant to the exam. Class 1, okay, class 1 also there are two categories. One which is paid by employees, the other one paid by employers. Then class 1A, this is always paid by employers on the taxable benefit. Remember we had a lecture where we calculated employment benefits, or there were some 9 to 10 benefits. All those benefits add together, on that we pay national insurance. That is known as class 1A, and this 1A NIC will be paid by whom? Employer. So employers only pay class 1, they only pay one NIC. Employers have to pay two NIC, one on class 1, that is on the employee's salary and the other one on 1A. Then class 4, this is paid by self-employed. Class 4, there is only one. Then so we'll start with class 1. This is due on both employee and employer on the gross amount of your earnings from employment. So this is due from all the employees between 16 and your state pension age. If it is employees who are paying the class 1, it is known as primary contribution. Class 1 employee contributions are also called primary contributions. Then employees pay these primary contributions on their earnings above a limit. What is that limit? This is the same as the personal allowance. Do not get confused with the personal allowance, okay? This is the lower earning limit. If you are earning above this, then you have to pay NIC. Anything less than 12,570, you don't have to pay any NIC. Okay, so for 24-25, this is the rate, and this lower earning limit, you have to know this limits, they are fixed. So anything above this, you have to pay at 8%. And then at a lower rate, 2% on earnings in excess of the upper earning limit. Remember, anything above the lower, that is 12,570, 8%. Anything above the upper, that is 5270, you have to pay with this 8%, you have to pay addition, you have to pay 2%. It is not just 2%. And if it's between the two, between 12,570 and 5270, then 8%, only 8%. Now, so primary contributions, They are deducted from an employee's gross pay. Remember, when we are calculating employees pay, from here you deduct these contributions. Okay, they are not taken as an allowable expense. Okay, they do not rank as an allowable expense when calculating employees income tax liability. Remember, this NIC you can't deduct as an allowable expenses when you're calculating the employees income tax liability. Now, so these are the earnings. Under earnings, these are the things. Anything that an employer receives in cash, IC earning, or marketable assets. That means you are being asset given instead of cash. So you are giving asset instead of cash, which the employee can either use as if it's cash. Let's say lunch or voucher, or is free to sell to obtain cash. You can freely sell it to obtain cash. Even they are taken as your earnings. Remember, it's gross earning. Gross earning means before you deduct, before any deduction, such as a pension contribution. Before you deduct qualifying gift aid donation, pension contribution, anything gross earning, all your salary, bonus, commission, anything in cash, voucher you add, that is your earnings. On that you have to be class 1 NIC. You have to see whether that limit is up over the lower earnings limit, over the upper earnings limit, or in between the two. Then this class 1 does not apply to the benefit. Why? Because for benefit we have another NIC, that is class 1A. Or if the employer is reimbursing the expenses, even on that class 1 NIC will not apply. Okay? Because the reimbursement of expenses is taken after tax on the amount that is spent out of after tax. So that after tax includes class 1 NIC also there. So let us understand class 1. Now, employees earning an annual salary of 60,000, only 60. So if you see 60, it is above your upper limit also. It is above your the lower limit. Lower limit is what? So find the difference with the, see, whenever it's this 60 is over the upper above over the upper limit also. So first always this difference between the upper and the lower and into 8%. This is always fixed because it is above 5270. Then the excess over 5270. So 60 minus 50, the addition is 2%. Add both. So this is your contribution. Moving on to class 1 employer. Class 1 employer is secondary contribution. Employee primary, employer secondary. And this is due from all the employers over 16. Remember, there is no state pension age limit over 16. So unlike primary, you see, in the primary, contribution stopped when the employer reaches the state pension age. But for employer, it keeps on. But here, there is only one rate, that is 13.8%. This limit will apply to all the earnings above a lower earning limit of 9,000. Here, the lower earning limit is not same as the employee's contribution. Here, the limit is 9,100. Anything above 9,100, 13.8% applies. There is no upper earning limit. Anything above 9,100. One earning limit, one rate. This is easier. So now, but the secondary contribution, if you see, this is like an additional cost to the employer, isn't it? Because for employees, they are paying this. So now, because it's an additional wage cost to the employer, you are going to get a tax relief on this NIC that employees are paying. How? Employers can deduct this as a trading expense from their income. Okay, so they attract income of corporation. If it's a company, they are going to get corporation tax relief. If it's a individual, income tax relief, because they can deduct relief. So only the employers can do that, not employees. So both primary and secondary, how are they collected? Through payee system, deducted at source. Now, so this contribution, all contributions, if you see, they are strictly calculated on a weekly or a monthly basis for the tax year ending 5th April. But for your exam purpose, use annual basis, only annual basis. So here, for the 2025 rates and limits, they are given. They'll be given to you in the exam. The rates, the limit are provided to you in your exam. Thank God. Things are made easier now. So there is an annual salary of 70. Now, so this 70 is above 9,100. Find the difference and apply 13.8%. That's it. Now, activity 1. So here you have to calculate both class 1 employee and employee's contribution regarding 24,000 salary. If you see the 24,000 salary, it is above, see, first we'll go by the employee. It's above the 12,570, the lower limit, but not above the higher limit. So only 8% will apply, 2% will not apply. So the difference 24,000 minus 12 and 8. That's it. And this 24 is more than 9,100 and there's 13.8. This is for the employer and you get. That's it. Remember, when you are calculating contribution, do not add the two. Always keep it separate like this. Label it properly and keep it separate. Then annual employment allowance. What is this? Employer gets this allowance, not employees, because for employer it's an additional cost. So for them, they are going to get a further relief. How? Through an allowance. So each employer is entitled to claim an annual employment allowance. So this will further reduce their employer's class 1 NIC. By how much? 5,000. 5,000. For example, let's say the total contribution of an employer is 8,500. This 8,500 you can further reduce by 5,000. So now your liability is only 3,500. But if the total is 5,000 or less, remember, if your contribution was 5,000 or less than that, no payment need to be made. Then no payment. Entire thing is zero because your allowance is 5,000. It will be covered by allowance, right? Now, this claim is made through payroll software used by the employer. Employees' contribution and employers' class 1A contributions are not affected by this allowance. Please understand. This only affects class 1 NIC by employer. That is the secondary contribution. Class 1A contributions are not affected. Employers' contributions are not affected. Now, one more condition is there for the director. You have to be very careful. And the director is the old employee. In this case, there is no employment allowance available. But the director and only employee, they should be subject to class 1 NIC then only. If they are not subject to class 1 NIC only, what should you do with the allowance? Then no need. That means above, if they are earning above 9,100. Okay. Then it is also not available to a business whose total employer NIC in the previous tax year was over 100,000. Remember, in the previous tax year, if your total, okay, not just one employer, total employer NIC in the previous year was more than 100,000, then you will not get the 5,000 employment allowance to deduct. Clear? So these two conditions you have to remember. Now, why is this? This restriction has been introduced as the allowance is intended to support increase. So because of this allowance, it is supporting increased employment. So they are saying bring more and more people rather than keeping one people only, because if you are keeping only one employee, you are not going to get any benefit. That 5,000 you can't deduct. But if you are keeping more and more employees, you are going to get the 5,000 allowance. So this will encourage employment. Okay, remember, this could be asked as a part of a tax planning question. Now, class 1A. This is paid on your benefits. All the benefits that we have studied: accommodation, fuel, car, van, interest, beneficial loan, all those things. Take 1A. So this is paid by the employer only based on your taxable benefits. Unless they are readily convertible into cash. Remember, if you can readily convert it into cash, it does not come under 1A, it goes under class 1. Okay, we have covered this in 1.2. So tax exempt benefits. If the benefit is tax exempt, it is exempt from tax, then no class 1, no class 1A NIC. Even it is exempt from NIC also. So class 1, same rate, 13.8. Okay. So here, There is no limit because you have to find the benefit. On that, apply 13.8%. Now, so the liability, this 1A is paid by the employer again through the pay system, but when? By 22 July, following the end of the tax year. If you are paying electronically, but if you are not paying electronically, the payment date is 19 July. But for your exam, use 22 July because it is assumed there is an electronic payment. So remember 22 July. Now, class 2 NIC. Sorry, activity 2 class NIC class 1. I'm sorry. So here there are two benefits, company car and car fuel. Okay, annual salary is 52. So calculate class 1 and 1A. Remember, class 1 is on this 52,000 salary, 1A on this too. Already benefit has been calculated and given to you, no need to calculate. So now 52 is more than 50 to 70. So this will be chargeable to 8% also, 2% also. How? Upper minus lower 8 and 52 above 50 to 70, 2%. Done. Then remember class 1 only by employer, but employer 52 is more than 9,100. Find the difference and apply 13.8%. Then 1A. Add both the benefits and apply 13.8%. Done. You see all three benefits are kept separate. They are not added together. You have to keep it like this. Then class 4 contribution. So we are moving on to self-employed from employees and employers. Okay. So this is payable by self-employed between 16 and state pension age. Same like class 1 employee. This liability is calculated based on what? Not income. You are a self-employed. You are going to get profit. Tax adjusted trading profit. Remember this tax adjusted trading profit, where did we calculate? In my previous lecture. Starting in lecture 6. So go back to lecture 6 and see. So there is a main rate that is 6% and 2%. Here the rate changed. In class 1 it was 8%, 8 and 2. Here it is 6% and 2%. So 6% between the lower and the upper. Upper and lower limit is also same. So with anything between this 6%. If it's more than 5270, then 2% will apply. So now rates again will be given. So here the contributions are collected with self-assessed income tax. Remember this class 4 will be calculated along with your income tax. They will be collected self-assessment, not under payee. Class 4 is not payee. This will be collected along with your income tax liability under self-assessment. And this also in 3 installments. 2 payment on account, the other one is balancing payment. This we'll see in the next lecture. Okay, we will be covering it. Lecture 11. So although a self-employed individuals are liable to class 4, remember a self-employed individual who also employs staff, they can be liable to class 1 and 1A also. So along with 4, because they are employing a staff for that employee, he has to now pay class 1 also and class 1A contribution also in respect of that employee. And also he might get an employment allowance as an employer. So we'll see activity 3 to understand this. Now having profit 52. So calculate class 1. 52 is more than 5270. So 6% and 2%. Now contrast with employees. Remember, if you are looking at the contributions class 1 and 4, contributions for self-employed are lower than contributions because where 8% and here it is 6%, right? So that's why HMRC would always want you to claim you as an employee rather than self-employed. We did a lecture also on this, right? You can recall now slowly. Lecture 6. Yes, in lecture 6 we went through the badges of trade. Why an HMRC would want you to declare you as an employee rather than self-employed, because NIC, they are going to collect more NIC if you are an employee versus self-employed. Now, so class 4 on profit 1 to 12,570, 12,570 to 56, and then over 5270 additional 2%. Then here employee, again the limit is same. This is same, but the only difference is here it is 6%, here it is 8%. Rest everything is same. Then here employers also have to pay 1 to 9,100 0, above 9,100 13.8. And then class 1 on taxable benefit also 13.8. So you see, now that's it for this lecture. So this we have calculated NIC under income tax for both employed and self-employed person. We have calculated both class 1 and 1A, class 4, and understood the 5,000 annual employment allowance, but under two conditions it is not available. Then let us summarize this lecture. So class 1, they are payable by employees on their earnings, gross earnings, right? Your salary, bonus, commission, anything that can be converted into cash. Then class 1 employers NIC are there, and class 1A NIC is also there, which is also paid by employer on benefit paid by 22 July under payee. And annual allowance is 5,000. But if you are the sole employee who is also a director, not 5,000 is not applicable. Self-employed people pay class 4 NIC on profit. Contributions for self-employed are lower than employee. So there are technical articles on this lecture, that is higher skill. You can see on your ACCA website. So this is the only technical article you have to read for this lecture. So thank you for watching, and I shall see you in the next lecture, which is income tax administration. All the penalties, how do you file, filing days, everything, how do you claim. So everything will be covered in detail in the next lecture. So if you haven't watched my previous lecture, please go back and see, it's there under the tax playlist. And thank you.